Welcome to my YouTube channel, and today I'm going to show you a very interesting trading system which I have in place, which I personally have a complete love for, and definitely something I really would cherish sharing with you all today. So guys, this one is called MBBS, Merck's Buy and Boom System. So some things to be noticed here. I'm going to be sharing the rules of the system, and then I'm going to be sharing certain examples of stocks. I'm going to take stocks randomly and share those examples. Now, if you notice, the name of the system has is got to do with buying. So this system is not a system where you use to sell a stock, you used to buy a stock. So keep in mind that this is only for the long side. The reason why this is only for the long side is because when stocks go up, they go in a different kind of way. When they go down, they go in a different kind of way. So the indicators and combinations used for generating the perfect buy system and the good buy systems are not same for the short side. On the long side, these are some of the ways you can do things. I'll be teaching more in the indicator factory course, and this system I'm going to open up in the indicator factory course. For those who want to join, click the link below to find the introductory webinar. Now, next thing is let's see what the objectives of the system are. You can see the first objective of the system is to get a risk to reward ratio of minimum 1:3, right? And to use, and when I say a minimum risk to reward ratio 1:3, there are there are reasons why I'm saying this, and this happens in case where you have a risk to reward where your risk is very less, your reward is almost 3 times of risk. So can this be 1:2? Yes, in given cases it can be, but can it be 1:3? Ideally, yes, it should be 1:2, around 1:2, 2.5, 1:3 or more. And we're going to see how. The major objective of this system, it suits my personality because I like to take stop losses which are not very big. So this has the conservative stop loss. That means that each stop loss is not going to exceed 1 or 2% of the contract value, 1 or 2% of the stock. So that makes things very interesting for me. To take selected trades, so this system gives selected trade. You have to understand that if you have built a system, the more selected the trades are, the higher chances of most of them working out. Now, this system keeps giving signals across different stocks, and there is a way to understand it, there is a way to take it, right? So these were the objectives of the system. Now, the rules of a system. The rules over here I'm going to show, come to the chart, right? I'm going to come to the chart, but let's just look at the rules of the system. The first rule is that the 15-minute candle with the up arrow should engulf the middle Bollinger Band or make a new high above it. Now this is talking about one candle. This can go to 1 to 2 candles. I'll be sharing this in much details inside the course, how to trade this. But yes, you take this much for this video right now, that to be able to understand the examples I'm trying to give you, I'll be giving you right now on the chart, right? A 15-minute candle. So it is supposed to be used on a 15-minute chart. Now the stop loss is the last low below the lower Bollinger Band. Okay, so the Bollinger Band will be there below the last low. And the third is no trades. The third rule is there's supposed to be no trades if there is a bigger stop loss than 2%, right? Or roughly more than 2%, right? You should hold the trade for minimum 2% or more. So this system demands you to have a target of 2% or more, right? Now, trailing stop loss rules I haven't mentioned. simply because that will be done in the course in much more details, and I will be explaining each and every indicator, its meaning, why the system is what it is, right? And I'll just revise the stop loss rules with you because risk management is of umpteen importance in trading. So the stop loss rules will be: number one, stop loss should be the candle low if it is very close to the lower band. Of course, examples are coming up. Or the stop loss will be the last time candles made a low below the lower band. So the low of the candle, right? I'll come to that when it went below the lower band recently. Now the cases where there will be no trades, okay? If the stop loss increases and exceeds 1 to 1.5%, okay? Now 1 to 1.5% is said over here. There are parameters where it can go up slightly up to 2% also, but yeah, shouldn't exceed to 2%. So don't trade if the stop losses are big. That is what I mean by this slide, right? Next is, do not trade, and there are no trades if the lower band is touched the low, okay? So if the lower band has touched the low recently, but it is above the current price, okay? If it is above the current price, no trades. Lastly, no trades after a band bubble. What do I mean by a band bubble? We will see with examples. So no trades in case there is a band bubble. Now, what are the lines I'm going to show? What are the things that I mean to say when I'm talking about all these things? So basically, for that reason, I'm going to simply open up the chart in front of you. Let's take up a stock. Say for example, let's take up Hero Honda, Hero Motocorp, right? Now, I've taken up the 15-minute chart of Hero Motocorp, as all of you can see, right? This is the 30-minute chart. This is the 15-minute chart. Now, this particular arrow mark which you see is giving me the buy and sell signal according to this arrow. Now, this is only one of the indicator. It is not purely what my system is about. It is a combination of indicators what my system is about, right? Now, when this is giving me an upward arrow, this is giving me a buy signal. Now the buy signal from this arrow mark is only the signal pertaining to one of the indicators. One of the indicators, which is a line you cannot see right now. Which particular line, particular thing you cannot see right now. That, just to share with you all, is a very sophisticated and very different kind of line which I have made. It has about 4 parameters, and I have fit in the right parameters which have worked out very well for this system. Now, after getting to those parameters online, I have combined them with the Bollinger Band. Now, this Bollinger Band also has different parameters than the usual Bollinger Band. If you plot a Bollinger Band on your chart, it will not look like this. So, I have made this in a certain manner, and I can teach you how to make your own system also. I'll be talking in details about this system and how to trade it in the course in great details, and students can follow it, make money of it, and understand what it is about as they're learning more about how to trade it, right? So let's start. What are the conditions to be met? What are the conditions to be met? The conditions to be met are, if I see this white arrow and simultaneously I see that there is an engulfing of the middle band. So this is the middle band, this is the middle band. You all can see the middle band, right? The middle band is getting engulfed. That means there is an open which is below the middle band, right? Which is below the middle band. There's an open which is below the middle band. You all can see that. It is being engulfed. So is this signal valid? How many rules does it come across and follow through? Does it follow through with all the rules of my system? What is the rule number 1 of my system? Rule number 1 for my system is that I should have an engulfing of the middle band, right? Or at least a high above the middle band. It should be a green candle. It should be a 15-minute candle, and it should have that buy arrow mark. So this arrow or triangle mark over here is there and everything else is perfect. There's only one problem. The entry would be a 3125 roughly, which is the close of the candle, and my stop loss would be 3063. So that exceeds 2% stop loss, right? I'm going to show more stocks. So I will not take this trade. This trade is good, but I will not take this trade. I later see that it does continue going up. However, I'm not going to take this trade because it does not fall under my system. Now let's go ahead. So going ahead, I see there is another opportunity right here. So as I said, sometimes in case of two candles, which I'll explain in more details in the course, where we see a white arrow, right? And this is sufficing only in one candle. This is sufficing in only one candle. The white arrow, as well as the close above the middle band. So the stock closes at roughly 3210, right? And the recent low below the Bollinger Band of the lower band of the Bollinger Band is 3176.2. So yes, I can take this trade. I can take this trade because this has a risk that is 3210 and 3175. That's almost 35 rupees, and 35 rupees is close to 1% of a 3000 rupee stock, right? 3200 rupee stock. So I can go long over here, right? And now once I go long over here, I have to wait patiently for a target. The target should be 2% or more. Here I can see that I'm taking a risk of roughly 1% and a target which I would get. Now the exit rules are also there, but yes, there will be a target I will get. A trailing stop loss rules are also there. There is a target I can get of 1:2 or 1:3. So in case of a 1:2 target, that would mean 3210. I'm risking about 35 rupees. So I should get at least 70 rupees. So 3280 around about becomes my target, right? So have I achieved my target? Yes, I took the trade and in the next day the target has gotten achieved. So perfect. This really comes together with all the rules, right? Now coming next to the next buy arrow. Next buy arrow exists over here. So one thing over here, this trade comes after a bubble. I'll explain what a bubble is very soon with more example. However, this trade over here does not engulf it completely, and it has a stop loss which is far. So 3289, and the stop loss is where the lower band has been touched. So the lower band has been touched way below. So this trade is null and void. We cannot take this trade, right? There is a buy arrow over here, but there's nothing happening with the middle band. I avoid this. I keep avoiding if they do not meet my rules. The same thing goes. It's not engulfing the middle band. Now, over here, I see there's an engulfing of the middle band or a high above the middle band. At least the open is below middle band, high above the middle band. So here is my entry. The close of this is 3250. 3250. The stop loss would be, because there is a low very close to the lower band, a stop loss of 3230 is going to suffice. So 3230 and 3250, 20 rupees. Isn't that interesting? 20 rupees, that is less than 1% risk on a stock which is worth 3200 rupees. That is so interesting. So I go long on this. I go long on this over here. And of course, if my stop loss is 20 rupees, right, my target should be 40 rupees or 60 rupees. So let's take, what would be a 40 rupee movement from here? Roughly 3290, right, which would come over here. And a 60 rupee movement would be 3210, which comes somewhere over here. And later it overshoots that also. So I see that in all ways this is working out beautifully. A risk of 20 rupees on a stock and a reward which is 2 to 3 times. That's beautiful, right? Now let's come back to what the next signal shows us. Now over here I see uh, another signal, and it is sufficing two of my conditions, but there's a problem. Here I see a bubble, and this bubble, you can see, this is a bubble. You do not want to take a trade over here because right after a bubble you see a signal, so you avoid this trade. Right after the bubble you're seeing a signal, so you avoid this trade, right? And another signal again right after the bubble, you avoid this trade. So once this bubble exists, you want the market to settle down because this bubble is showing me that there has been a period of high volatility. So I do not take any trade right after the bubble. So the second half of the day, I see another trade, which is a buy arrow. Let me just shift the chart over here a little bit. I can see a buy arrow. Right, the bubble has gone long back now, and I see that there is an interesting close, which is at, if you look at the close, it's 3282, and my low, which is very close to the lower Bollinger Band, so I can take this as a stop loss. 3268, 3268 and 3282. This low is 3268 and this closes 3282. So that is a very small stop loss, right? So that would be around 14 rupees as a stop loss, and 14 rupees entered at 3282. That means I would want a target of roughly 28 rupees. That means 3310. 3310 is coming about over here itself, right? And if I overshoot to 1:3 risk to reward, I still achieve the target within the first and the second day of taking the trade. So if I hold on to the trade, I'm seeing I'm getting a decent target. Now if you see in between, there has been this particular little line, although it has not made a high or gone above the Bollinger Band middle band, right? So this is null and void, and this, because this is after a bubble, I have to in any case avoid these. Even if they fulfilled other expectations, I have to avoid these. It is coming after a bubble, so I avoid after what comes after a bubble, right? Now again, you see it is within a bubble, within a bubble. So anyway, this stop loss is very big. I'm not going to take this trade. I have exited my trade previously, which I had taken over here. I have exited with 1:3 and 2 and 1:3 risk to rewards. Right now, moving on. So we have seen a big bubble over here. Right now, this bubble, I want to avoid taking any trades when it comes to this bubble. Anyway, the next entry I'm getting it over here, which is roughly 3,300, and a stop loss which is 3260, which is exceeding 1%. Although I can still take the trade, but since it is after a bubble, I'm going to avoid taking this trade, right? So I want to enter markets when volatility is low, and what comes after that is more volatility. So the bubble is expressing me a high volatility, and this is a special Bollinger Band. It is not the regular Bollinger Band, and this is also not made out of something which is ready-made, right? I have got parameters which are set, which are things I have tested myself on charts and how they're working out, right? So I do not take a very big stop loss. I avoid this trade altogether. Again, avoiding the signal, right? Now right after the bubble, avoiding the signal. After the bubble plus a larger stop loss, again I'm avoiding. It's inside the bubble, so I'm avoiding each and every of this signal, right? I'm not going to be trading when the chart is inside the bubble, right? Again, there is no trade over here because this big is the stop loss. I may have taken this trade, but this big stop loss, nope, nothing doing. Again, nothing over here, nothing over here. Over here, after the bubble has ended, there is a chance I can take a trade over here. So I can take a trade looking at the close. Let's look at the close. 3317, and the low is 3305. 3317 and 3305. So over here, whenever I'm going to take a trade, I'm going to look for risk reward, because I'm looking for a risk reward which is decent. I should be looking for at least 20 rupees of movement from here. So that happening? No. My trailing stop loss gets hit. The trailing stop loss rules will be set in the course. They include two principles. One of them is very simple, which is close below this band. So nonetheless, it's trading, and sometimes you will have winning trades, sometimes you will have losing trades. It's a part of the game. Although most of the trades are winning, and they're winning by a better margin, right? So again, this is a bubble, so I avoid taking any of these or even looking at them. It's still inside the bubble. I'm avoiding this bubble. The bubble scenario is not interesting for me. Now coming to this one, there is a high above this and the open was this. So let's take the close, 3216, and what's the low, which is the recent low, 3202, right? And I can see there's a movement all the way to 3243. So I still feel that the 1:2 risk reward has been sufficed over here. Now next, coming over here, another buy signal. Now this is pretty clear and valid. Right after there were bubbles still over here. There is no bubble patch, no bubble patch at all. Okay, very narrow, and I see the close at 3213 and my last low 3190 roughly. So I think a 24 rupee risk is okay on a 3000 rupee stock, right? So I go long over here. It is running, and there's no close below this middle band. It's really running high, and as I can see, if I want to have a 24 rupee stop loss, then my target should be roughly 50 rupees or more. So 3214, going from here, from 3214 all the way to 24 into 2, that's 48 rupees higher from here, right? So I would want 48 rupees plus 3214. That becomes around 3,260 plus. Am I getting 3,260 plus? Yes, I'm getting 3,260 plus. So great. I have sufficed my risk rewards, right? Now moving on. I see there is a bubble over here. So I'm not going to do anything about this. Again, the bubble has just ended, so I'm not going to do anything about this, right? 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 Again. Now, in this case scenario, the bubble is just has ended. As you can see, there is something I've put underneath this indicator. This particular thing is showing me that every time the bubble is there in existence and every time it goes to the low, there's something else, right? So until it goes to the low, I'm not going to take a trade because the bubble is along with this. Well, and this is called the average true range. This is the ATR, average true range, and I've put a very regular ATR over here, right? So I'm going to avoid any kind of trade until the bubble has really narrowed down. There have been really fat bubbles over here. So I'm not going to take any of these trades. Now I might look at this one. What is the stop loss? So this is the close 3225 and the stop loss would be 3200. So I can take a 25 rupee risk. So I can go long on this one, and therefore I need a target which goes up to 50 rupees. So roughly 3400 it should touch. Is it touching? 3295. So it's coming close to almost 95% of my target, and then heading back down. No trades over here. The stop loss is very far, and there is a bubble over here, nothing doing. The bubble is there, nothing doing. You see the ATR, it's expanding. I need it to be at the lows, nothing doing until it is at the lows, right? Here, I can see a trade. Let me check what the stop loss looks like. 3179 and 3147, right? It exceeds my general stop loss on this. Exceeds my general stop loss on this, so I would want to avoid the trade. And in case I take the trade also, a close below the middle band is happening right after 3 candles. So in case I took the trade, I would lose around in my trailing stop loss 7 or 8 rupees on this stock, right? Again, there is the bubble which is in which it is inside, right? And now it is going out. Again, there's a repeated bubble, right? Again, there is a narrow movement. So I'm not going to touch the stock because there is a bubble over here. Now the bubble I see has narrowed, and we see the ATR again coming at the lows. I see a green signal, and in the second candle it is, as I was telling you guys, this example fits right here. The second candle sometimes hits above the upper band. So in that case scenario, it is still valid. And over here I see there's a close, right? This is anywhere null and void because this is not catching the middle band, right? So what are the lows over here? So this is the close at 3144 and 3116, 3144, 3116. Okay, not bad. So that's roughly 20 rupees or 20, 27, 28 rupees, 20, 27 rupees. And this heads on towards going on to a fabulous trend even the next day. I think we have come to today, which is the end, yeah, of this chart. Okay, so from 3144 we can get a big move without hitting any of our trailing stop losses, which is a big bang move. It still seems to be continuing, right? However, it is about achieving the target. So I guess within this range, one achieves the target pretty nicely and suffices the risk to reward need of the trade. Now let's take up some other stock. Let's take up another stock from a completely different sector, for example. Let me just scan through any random stock. I'll just click, and whichever stock comes, I will just take that up. Last time I had certain requests to give more stock examples, so I think example or two should suffice very well, right? I had some requests of getting some examples. Okay, so Bajaj Auto, for example, has been something which has moved recently, both on the down and the upside. So it'll be very interesting to see. Since it is a buy signal thing, you will notice when you're taking downtrending areas, okay, not many signals will be coming. Not many signals will be coming on the downtrending areas. Okay. So again, let's start. So this is the data which I'm having in with me, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days data I'm putting together. And from the beginning of this data, let me start. 1 second. This is the hourly chart. So on the hourly chart, I am having more data because the number of candles. Okay, here we go. Much more data. Yeah. So this is a 15-minute chart. I'm going all the way back, and we're going to start off and go all the way forward to see what are the signals we got on this stuff. Okay. Let's start. So from the very beginning, I hope all of you are not getting bored. and we can see how the system is working. I'm going to apply the rules as they are supposed to be applied. So there's a big bubble in the beginning itself, so avoid any kind of trading right after the big bubble. So the bubble has come down, ATR at the lows also. Okay, so again, the first after the bubble I'm going to avoid, right? Because anyway, if I take a first after the bubble, my stop loss, if you remember the rules, a very important rule according for the stop loss was no trades, no trades if the last lower band touched low is above the current price. Last lower band touched low. So the last lower band touched low was over here, right? Over here, which is just showing us how flat this is. So I'm not going to take this trade, right? So uh, around this area, no trade. Here I still see a trade. It's touched the lower band recently. Let's see what my stop loss could be like. So this closes at 2630, 2629, and the low over here is 2605. So 24 rupees risking on 2600 rupees. Now that is less than 1% risk. If I have taken less than 1% risk, I want, or roughly 1% risk also, I want 3% reward. Is it sufficing my reward criteria? Okay, let's just check. So 24 rupees risk into 2, 48, right? 2 to 3 times 48 rupees reward. So 48 from here would be around 3 to, this is 3629, right? If I add 50 rupees to this, it will be 79, and subtract 2 rupees, 77. 2677 is my needed price. Am I getting it? Oh wow, pretty immediately. So the next day itself, it is coming to my target, right? It's working best, no problem. Now, no trade over here. Right after the bubble, plus it's above, there's no engulfing. I avoid these, avoid these. The bubble is coming down. First signal of the after the bubble, avoid. Nothing doing, nothing doing. Now this seemed interesting. There's a low below the low point, very close by also. 2656. 2656 is the low. Entry would be 2674. That's about 18 rupees. And 18 rupees is my stop loss. I see the stock has gone on, but it hasn't hit my stop loss. Again, it has gone up and it has fulfilled all my possible targets. All my possible targets. So that's great. So that's great. You see? That's great, right? So it suffices the trade's need and it really compensates for the risk we are taking, right? Now, in between, there was a signal over here. Now, since there's a trade already running, I won't look too much into it. However, just for the sake of our intellectual discussion, and there is no bubble recently, so I can go for this. Let me just see how much the risk reward is. So the close over here is 2686, and the low would be considered 2656, which is crossing 1%. Okay, so if it is crossing 1%, I will wait a little bit, or I'm not going to take this trade at all. There's no point waiting a bit, as the rule says you have to go by the candle, which is this candle. So I will most probably going to avoid such trades wherever the risk is exceeding a certain level, right? I'm going to avoid this trade because this system is built for me to take trades that are friendly to my personality. I like taking such trades, right? I like taking low risk trades and trades that perform well, trades that have higher probability. So this is a bubble after this. I'm going to avoid taking any signal. Anyway, I have a running trade. So This is null and void. Big bubbles, no trade anyway, no trade anyway. The bubble seems to come down. The first signal after the bubble, the first engulfing after the bubble. I'm going to avoid this, although it is going higher later, but I'm going to avoid this. No engulfing, no engulfing, no engulfing. Okay, I get something over here. I get something over here. Now, over here, my trade would be at 2690 and my stop loss would be at 2682. And I can see that my stop loss has been hit. So I stop out, losing roughly a close would be 2692 as I said, and 2681. So about 9 rupees on this stock, which is okay, I guess, which is okay. 9 rupees stop loss. Earlier occasions we made around 48 to 50 rupees on every trade, right? Now the bubble is there. Any trade over here, I'm gonna avoid. The bubble is there in existence. No, this is going to be the stop loss. So no, nothing doing, nothing doing. So mostly going to avoid the trades which exist within the bubble. You can see the ATR right here, right? It's a big peak in the ATR. So I need it to crunch completely before I take any call, any trade, right? So I'm going to avoid these signals, and there are parameters which you will understand if you come to the course, which I will say, right? You can only take selected trades with this. That is what the purpose is. Now, if you see again, there is a huge bubble. I am not interested in taking any trade with such high ATR. I need it to squeeze down. Here I see it's coming down. Again, the bubble is there in existence. I will not take any signal, not this one. This was anyway not a trade because not engulfing the middle band. Now here I see something interesting. And is the low very close to the Bollinger Band? No. So I'm going to take this as the stop loss. What is the close 2643, and this would be 2624. Okay, so 20 rupees stop loss. That would mean I need at least 40 to 60 rupees target, right? So about 2700 plus. Am I getting it? This is my stop loss. Am I getting it? So I got the entry over here. Yeah, I pretty much get my target in the day one, and if not day one, then day two. No, not day two, day three. I get my target, right? So this trade seems to be running and achieving all my targets. Now, if you notice, Bajaj Auto came from a downtrend to an uptrend, and we were able to capture a significant portion of the move. So in case the downtrend is there and our system is not telling us anything about taking a trade, it is completely fine, right? It is completely fine. So if it is something we'd like actually, that in downtrends we are not in the trades on the long side, right? So after achieving the targets, okay, from the signal which we got, the last signal, I'll just zoom in a little bit. Yep. So we were looking at 2700 plus, which was achieved. Okay. So we are looking at this stop loss. Yep, it got achieved. Later again it went down, the stock. There haven't been any engulfing, not a single one. Nope, it has opened above. There has been a signal over here, and I would say that the bubble has come down, right? Although the first signal I do not take after the bubble, so I'm going to avoid this one. I can take any of these signals very much, 2679, and I put a stop loss at 2663. So that's a 16 rupee stop loss. Works well. Is this stop loss hit in the next few days? No. I can see there is some considerable consolidation, but my stop loss is not hit, and therefore I hold the trade for 2% plus targets and I achieve all my targets. As I see these trades coming about within the consolidation, I see more and more buy signals. I can choose to add on to a trade. I can choose these to also play out the same trade by adding on, or if I had missed this trade earlier, I can take the trade because my stop loss is well defined over here, right? This one I would avoid because it's in a bubble. Even these I will avoid. I'll start taking trades from this one, right? And all the targets are achieved. Even over here with this stop loss, all the targets are achieved very accurately. The strongest parts of the uptrend are giving me very big moves. Even if there are consolidations, my stop loss is not being hit. So this is the benefit of having a system which you make with some hard work and good logic. The logic behind it will be explained in the course, and you can also use such systems to trade, right? Now look at the bubble. The bubble is coming down, right? But there's another bubble, no signal. I do not want to trade anything. I do not want to take anything as a trade over here, right? ATR has come down. Bubble is there. Still wouldn't want to trade. Is this a valid signal? No. No engulfing. Yeah. This one I can take. This one I can take. But then my stop loss would be, because the lower band was here, so my stop loss would be 2726 and my entry would be 2780, which is a 60 rupee this thing, right? Although my trade from roughly over here is still running, the first signal after the bubble I'm avoiding. After this I can still take, right, since I'm seeing that there are lows just close to the Bollinger Band. So I can choose to take these trades or not. My approach should be conservative, and it's fine if I did not get this gap up or did get this gap up. So I can see this, my system is working consistently. Now somebody was asking me, sir, please show how your system is working on Oro Pharma. And so I decided, I will give that as an example also. So I believe in taking a lot of days. So last 20 days of Oro Pharma are going to show me how this has worked out. So let's go all the way to the beginning and see how it is working out in Oro Pharma, right? Now, first thing first, this is seemingly have a bubble because there's a sharp move. So I will not entertain any of these signals. There is no engulfing over here. This is a trade I could possibly take. So this is 583 rupees and 578. So 5 rupees. And somebody may come and say, sir, trailing stop loss hit again. No, trailing stop loss, there are rules which will be explained in the course. It is not so that just immediately it will hit your trailing stop loss, nothing like that. So you see, this is the stop loss 578 and 583. That's 5 rupees on a 580 rupee stock. That's less than 1%. So let's go ahead. I bought it at 583 and I hold on for at least 15 rupees target, right? Because my stop loss was 5 rupees. For 15 to 16 rupees, I think is a fair target, or even 20 rupee I can get, right? 15 rupees 3 times. So let's see what is happening. Is it going all the way to from 683 to 600? is going to 598. There's a dip, doesn't hit my stop loss, and this dip also again. So since there is a bubble over here, I'm not going to take up, and there's no trade anyway because it is not engulfing. So this bubble is flattening out. We are already in a trend which is ongoing trade. One can use these signals. With practice, one will get used to the system, right? Even if one does not want to use these signals to simply add to the position, but those who want to trade intraday, they can have, a certain bias towards the long side while trading it. So we do overshoot our 600 rupee target over here, and we go all the way higher. So 15 rupees by taking a 5 rupee risk is good enough. No trades right after the bubble, avoiding it. Some people cannot see the ATR because it has become small. That is why I use the bubble concept, right? Now, avoiding trades right after the bubble because there has been a substantial move. So I would go for probably this trade. So what is the close? The ATR is coming down. Until it comes down and the bubble is also settled, I don't want to take a trade. Right? Let's look at the close over here. The close over here is 597. The low, the best places to trade this system is when the candle which you're seeing and the recent low or the candle low is touching the lower band, right? So this is 590 and this is 597, a 7 rupee risk. Even if I conservatively say a 8 rupee risk, an 8 rupee risk should yield me a reward which would be beyond 8 rupees, right? So 24 rupees reward should be fine. So that should be 623 plus, right? 623, 24, 22, anything is good. I'm getting this range. My targets are getting hit. There are in fact fresh signals to add to the trade over here because your trade is ongoing. So this is amazing. And I've been talking about Aura Pharma in my YouTube videos recently as well as something super bullish in the last 2 or 3 weeks, right? No signal over here. Now this bubble is where it is right now. So there's a big bubble right now in which the price is hovering. So I will not take this. Anyway, there is no engulfing happening. So nothing doing. I can afford to take this trade. So what is this trade? 617 and the stop loss is 612, a 5 rupee. Let's see what my target is. Target is not being hit. It goes close to the target and starts going back down. So it's okay. It's okay. You're trailing stop losses. You don't lose any money. You'll probably make some money. So it's fine sometimes. This is trading. It's fine sometimes to have small losses as long as they're small. Right? No trades over here. Big bubbles. Yeah, bubbles over here. Nothing doing. Bubbles settling down. Yep. Let's see what the close is. The close is 614.5 and 608. 608, 614.5. That's about 6.5 rupees stop loss. So stop loss of 6.5 rupees from here to here. Now guys, see stop loss of 6.5 rupees. I enter the trade over here. I keep a stop loss over here and I let the trade run. Execution is important. This is a good system and you can see how the results are coming about across different stocks. If I let the trade run, it goes and overshoots my target. But for that, I will not have to, I'll have to let the trade breathe. I will let it run. I will let it move around. Give it time to move. Many people don't focus on execution, which is equally important, right? So from roughly 616 rupees, you're getting a move all the way to 600 and not 616. Let me just one second. The exact, sorry, 614.5. You're getting a move all the way up to 637 and more as it is continuing. The bubble is big, so nothing doing. Anyway, there's no engulfing over here. Okay, this seems interesting. The bubble is settled down, and I may or may not take the trade. In cases of strong trends, there are ways which I'll teach you how to hold on to trades for longer, how to be in trailing stop losses yet be in profits. So you could capture such big moves, right? And if not, some other time when the market is given an opportunity, you can. So here again, the bubble is settling down, avoid, anyway there's no engulfing. After the bubble, I tried to avoid first few moves, right? But in case I took this trade, I would have hit my trailing stop loss and got out at cost or something. Again, it is okay because when I'm making money, I'm making big money. So it's okay. I need to be spontaneous, right? So is the stop loss hit anyway? Is the major stop loss hit? Marginally, yeah. It has made a new low. But the rules say that in the first three candle, if it goes back to the cost, one of the rules is, and I'll explain different kind of rules to all students. But yeah, next is this signal at 657 I enter, and my stop loss is 649, 8 rupee risk, slightly more than 1%. Even if I avoid this trade, I still get another entry over here, right? Similar entry, okay? So 7 to 8 rupees risk, slightly more than 1%, and a reward from 657 to all the way. The first impulse goes to 689.5 roughly, right? So that is something. That is something. 30 rupees, 30 plus rupees reward, which again goes higher, right? Nothing doing after this bubble. I avoid this signal. This one I can still take. In that case, I would hold on to the trade, right? With a stop loss over here, because I took the signal over here. My stop loss is here. So I would either take off some profits according to my rules. The rules will be the exit rules will be also taught in the course, and there are further additional signals over here to add on to the position, and you can see eventually without hitting any stop loss. Okay, since this is after the bubble, I'll first avoid this one. I will take this one. My stop loss can be still intact. Without hitting any stop loss, it has overachieved all the targets. So somebody going long over here in a matter of 4 to 5 days gets good highs to exit, however gets all the highs overshot and gets a move all the way up to 724. So these were the entries, and you get about 40. That's a huge move. It's a huge move, right? And then later the stock price is falling. Okay, targets have been achieved, big bubbles are here, nothing doing over here, no signals. There has been one signal over here, so one could have made capitalized money by going long. What is the high of this candle? 690, right? And the middle band, the Bollinger middle band, is at 690.25. High is 690.1. So slightly hits. So, and the next candle is a green candle. Maybe somebody could take a trade, but I wouldn't, because I like to take all the confirmations. But in case I did, I would have made a lot of money also in this one also, since my trade was already there. So bubbles, nothing doing. Anyway, no engulfing. One engulfing, but stop loss too far. Nothing doing within a bubble. Again, this bubble is there, Bollinger bubble. Avoid any trade. Okay, the bubble seems to be flattening out. In case I take this trade, uh, 673. Let's look at this example. 673 and my 685. So 12 rupees, roughly 2% stop loss. I can take this trade. It's not exceeding 2%. And you look at this. Look at the move right after this. So 1 to 2% stop loss do not exceed, and you will see how over a period of time the system tells you about how to enter if you follow the rules. Now, to build a scanning system, I've already built that, and I'll be sharing with all the students on my Spider software. You can do it. I'll give a free trial of the Spider software in the course itself. Others who do not want to use Spider, they can also use some other platform. It's completely fine. I'll teach you how to make systems. And if you want to join the Indicator Factory course, do join the link below or contact on this number. It's a 5-session course starting on the 22nd of September. I hope you all enjoyed the video. They've been trying to give you vivid examples recently. And during market hours, I'm having live sessions. So join my Telegram, and it's all there in the description box. During the live markets also I talk. Although since in live market there's a certain kind of move happening, which may not encompass all the system signals I'm getting. So these kind of videos are going to go showing you 20 days of data on a particular stock, and each of these different stock have different kind of movements. So make it all the more interesting. And the indicator factory course, a lot of people have enrolled. I still have some seats, so grab them. And the early bird discount is only available till this 15th of September. So thank you everyone. I'll see you all soon. Take care. Goodbye. Enjoy.